Hello everybody, hope that you are good. Impatient traders. That's what we talked about in yesterday's video. And that's why we are in the order book straight away, because I want to show you those levels of interest where price could go to really quickly to stop those traders. Because yes, we can see in the order book 52,500 and 53,000. What are those levels? Why is there liquidity at those levels? Are those stop losses? Are those limit sell orders? Or are they liquidations? Does it make any sense for the market maker to go to those levels? Well, yesterday, after uploading that video, I got a WhatsApp from the market maker and he told me, you got him again, CrypNuevo. We're going to go through his plan again. I think that at least what he's up to. So, yeah, we're going to try to make some sense of the order book, 52,500 and 53,000. Remember those levels, guys. We're going to go also through high block capital. We're going to check a few new things that I haven't shown in YouTube yet, like for example open interest gaps, and then we're gonna go back into the chart. So I'll see you in high block next. Okay, we're in high block capital, liquidation levels first. That's the rule of the channel. First the liquidation levels, then the heat map. Okay, let me change the setting. Oh, it's already changed. Perfect. The delta is pretty much neutral. Only 2 billion worth of short liquidations. Of course, again, take this amount with a pinch of salt because it's not a realistic number. Just use it as a reference, okay? But that is pretty much telling me that the delta liquidations is neutral. It's almost back to zero. Now there are a few spikes here in the chart that I see that could be interesting, okay? And they are mainly to the upside. You check that out, okay? Now the biggest spike is 52,868. So pretty much 52.9k, and the next one is at 53,130. Okay, those are short liquidations that have already stepped into a position. Okay, those traders have already stepped into a position with high leverage trades, and they are hoping that they're right. Their liquidations are at these levels. Okay, so between 53,100 and 52,800. That's what it's telling me, okay? There is a lot of liquidity around 53k. Now, if we go into the liquidation heat map, we're gonna see, I wonder, something quite similar. Let's check this out. Okay, let me take this like that. Okay, we can see some liquidations to the downside, but well, around $50,000 exactly. But of course, there are not as many as to the upside. You can see how there are more yellow bars to the upside, right? That means that there are more short liquidations than long liquidations currently, okay? And if you notice here, the brightest yellow bar appears as 53,150. That's also the level that we saw in the liquidation level. So what can we say here? We can say that at 53,000 area, there are a lot of liquidations. So remember, guys, that red bar that we saw in the order book at 53,000, well, those are going to be short liquidations, okay? That's your confirmation. So 53,000 are liquidations. In my opinion, is the main level of interest in the chart right now, where there is the most liquidity right now, is at 53,000. But I want to show you something else. This is a bit more for the high time frame. At least this is the way I use it, and it's the open interest profile, okay? I like to put in vertical. Let's check, for example, the 90 days. I like these bars to be thicker. Put it to 100, and what do you see here, guys? Okay, this is gonna get quite complex. I'm not gonna give you a full explanation because I could be talking here for 5-10 minutes about this. It's explained in the course. But what you see here are spikes of open interest. Open interest refers to the total long and short positions that are already opened, okay? So limit orders, buy and sell limit orders don't count for the open interest, only count positions that are already opened, all right? So you can see that, for example, at this level, 42,700, there are a lot of positions already open, all right? Many positions open at that level, same as at 51,800. And now my question is, what is going on? Are those 51,800 positions that are likely short positions? You can see the spike there is quite a big spike. Literally, it's the second biggest spike after this one, around 43k. All right. So are those short positions, traders that have open shorts a bit too premature because they're hoping for lower prices, and that's why he explains that there are liquidations at 53k. Okay, that's the logic that I'm thinking of. So once price goes below 51,800, these guys are gonna be possibly underwater. Okay, if I'm correct that those are short positions, they're gonna be underwater, and they're gonna start to add margin to their positions. Their liquidations are going to increase, and it can get a bit nasty. Okay. Now, I want you another thing to notice, that is this gap here in the chart that we can see between 50,200 and 50,700, okay? That's an open interest gap. That's a gap in the chart, that's an imbalance. That is telling you that there is a level in the chart where there are not many positions already open. So, in that area, it's a good area for price to go to, consolidate, and start triggering those orders that have been left in that area, okay? Because that way, you know, the market is gonna gain some fees, the exchange is gonna make money. If the exchange makes money, the market maker makes money, and the business goes on. So 50,000, between 50,700 and 50,200, that's a big imbalance in the chart regarding open interest gap. That's in fact the only imbalance I can see in the open interest. All right, so this is why I'm trying to make sense of this. If there are so many already open positions at 51,800, are those short positions? If that is the case, then that explains why there are so many liquidations at 53,000. So perhaps we could go there first. Deviation above the range, hit those liquidations, stop hunt, drop price back below the range, break down from the range, and go for this open interest gap here around 50,500. Okay, does that make sense? It can, maybe it doesn't. Okay, but you have to try to play with narratives of how you interpret and visualize what is currently going on in the chart, because that's the way to trade. Okay, first you have to make analysis, scenarios, and then you have to trade accordingly. So we're gonna go back into the chart. We're gonna try to make sense of this and how we can trade this. Okay. No, you are joking me. Look at that. Look at that. There you go, 52,960, guys. This is what we've been talking about. I can't believe it's happened to me again. That's the second time already that I'm making the video and this happens, okay? But well, at least you can see that, use it as an educational video. You can see it playing out. We're gonna talk now about the triggers, but guys, this is what we were talking in yesterday's video. What I was talking now with the order book and Hablo Capital. It takes quite a long time to explain these concepts because I want you to understand what it's in my mind process, okay? But yeah, I think we've pretty much hit already 53,000. I'm pretty happy with that, to be honest. Now, what the triggers are for this, well, the logic would tell me that this move is a move to hit the liquidations from those traders that have already gone short in this area here in the range highs. Okay, this was also we're talking in yesterday's video. Remember, we were here saying, okay, we got deviation from the chart. That means the price is going to go to the range highs. Everybody knows that this is a range, so the retail trader is going to place some shorts here and they're going to let them run for ages. What happens is that those liquidations from those short positions get stacked up above these levels, where there are also going to be stop losses. Okay, any trader that has a small leverage position and is playing with a stop loss is going to have their stop loss above this level. Okay, which has been hit right now. So yep, this could have been a stop hunt. Let's see how this evolves. For this to be confirmed as a stop hunt, then we are going to need to see this as a deviation, similar to what we saw here. Okay, price, if this happens, then price will drop back below the range highs. That's when we can open a short position. Okay, the 50 MA in the 4-hour time frame is going to line together with the range lows. If we break below the range lows and the 4-hour 50 MA, that is basically a new short trigger, or you can even add to the position if you haven't closed it from here, from the range highs, if this happens again, and this will go to 50,000, where we also have this liquidity pool from this large green candle. Okay, does that make sense to you? Because to me it does. Again, for that you have a clear trigger. and is that this has to confirm as a deviation. And for that, you need to see price coming back below inside the range, below the range size. That is basically short trigger. You can take profits at the range lows. I wouldn't recommend to take all the take profits, at least partially, maybe a 30-50% of the position. If we drop below this level, then add again to the short, okay, and let it ride until filling the open interest gap and this liquidity pool down there, all right? That's basically my game plan if we drop again below the range lows. If instead we start to see some consolidation above this level here, that was basically the previous high, let me mark it with orange. If we start to see some consolidation here, then it's very likely that this is not a deviation, okay? And we could see some continuation to the upside. And that would basically be confirming the high time frame scenario that we were talking about the other day. Let me remove all of this. Sorry, I want to be quickly because I want to upload this video as soon as possible for you to watch it. But in here you have a resistance. That resistance there, okay? So it's very important for price to close above this level, and if we confirm that this resistance is the new support, then we're gonna be at 60k very soon. All right, so that's where the continuation could go up to 60k, and then from there we'll watch again. But for now, guys, pay attention because we are trading in low time frame. My channel is mainly dedicated to day traders, so pay attention to this range over here. Look, I can mark it for you. All right, that is the range that I'm paying attention to. So that is basically how I want to trade this, okay? Drop back below the range highs, I'll open a short position. Simple as that. Otherwise, if we consolidate above this level, then let's see how the liquidation levels change, but there is probably going to be some more liquidation to the upside, and then we can favor longs again. So that's pretty much everything, guys. I'm glad that at least the first part of our idea that it was that there was going to be a lot of impatient traders opening shorts already here. We're gonna be next. That's basically even yesterday's title for the video. And yep, they've been next. They've been stopped. They've been liquidated. Of course, it's not a nice thing. I don't like when people get liquidated. I'm not the market maker. I'm not that evil, guys. But this is how the market works, okay? And I'm proving to you every day. The market doesn't work by conventional trading patterns. The market works by having many retail traders trading those conventional trading patterns, and then another entity taking advantage of that and making money from them, okay? That's how the market works, and that's what I try to explain in every video. So thank you so much, guys, for watching, and I'll see you soon.